Well, so there's a couple different uses of power which can accept intermittency, which I think in the short run can help with the build out of some of these things. Like they're very power hungry, and they can accept intermittency, so they can stop their usage and allow that power to flow to the grid more broadly um to help with reliability concerns. So one of them is Bitcoin. People have
Mm.
talked a good amount about that. We could talk about it. We don't have to. But Bitcoin. The other is LLM training of large language models. A lot of those algorithms can be stopped and paused, and they also require a lot of power. And then another one is actually the production of hydrogen, and like liquid hydrogen for power. Essentially, it's like a kind of like gaseous battery, or liquid battery, I guess. I'm not at all a chemist or like know about hydrogen, but I do in theory like hydrogen because it is a dispatchable form of power.
Mm.
So if it's on the grid, I really prefer that it's dispatchable until there's no reliability concerns.
So let's get into the Bitcoin miners a little bit, because I'm not
Yeah.
sure like what the scale difference is between something like Bitcoin mining and like LLM training. Like I've done some LLM
Mhm.
training, obviously like on the cloud mostly. I don't have like my own GPU cluster in my apartment,
Yeah.
but like uh, I imagine that like even with places like Google or AWS or whoever that's training really large models as a percentage of the whole power supply, I can't see how that would be very large. Um, but maybe I'm incorrect about that. I mean, maybe there's like a ton of LLM training that's like consuming a ridiculous amount of power.
I know it consumes a lot of power. I don't know percentage wise how big it is, um, but I know I think they can scale it up a lot. Like I think the demand is really there for them to do more. Um,
Yeah.
Again,
So,
I
so,
don't
so the big
I
thing
don't know
is
what
like
the
if you built out a giant compute cluster with just like a ridiculous amount of GPUs and you had like the kind of power availability and abundance that we're talking about, then yeah, you could um just go nuts with these models, right? In a way that like we can't really do because they're constrained by power pricing mostly right now.
Yeah, well, I know that they want to scale it up. So, right, there's been some reports. Again, I'm also not like a big fusion guy. I'm very supportive of it. People should try whatever. And especially if they're getting private capital, I think that's really awesome. So there are reports that like Sam Altman backed some fusion company and they have some contract that's pending. A lot of the way that these things work is that you propose to create a power generator, could be fission, could be fusion, could be whatever, and to finance it, you secure like a power purchase agreement from some large consumer of power. So, and then that allows the asset to get financed. So basically, you go to like Microsoft or Amazon or something, and you're like, hey, we want to build a small modular reactor. We could sell you this much power at this price for this many years. Let's get a contract.
Mm.
And if that's, if those terms are amenable to them, then basically they don't pay you anything, but they give you a piece of paper that then you can go take to private markets and be like, hey, you're going to get your money back. Or, you want to own equity in this or whatever the pitch is. I don't know all the different business models. Um, so so I think just at the margin, the demand for that kind of power can help a lot, and especially in this world where there are these like intermittency problems, and we do need to, send power back to the grid during these like catastrophic heat waves or all these things because stuff just happens. Like there are issues. That's why it's like I don't really think we're going to eliminate the risk. I just want to get it down to a much lower level. Like having some kind of concern once a year. Some of that's also obviously like the Austin trauma, as you kind of like alluded to, or like the Texas trauma around these things. But it's like, someone who's a little more statistically savvy than me can, figure out how we can measure that and like compare. And I just want it to be like an order of magnitude lower. it is now.
Yeah, yeah. So the miners, the Bitcoin miners, though, there's a lot of Bitcoin miner operations in Texas, and
Yes.
they already are like pretty well integrated into the system of we sign a contract for a certain amount of power, we agree to give power back to the grid at certain times, and we pay a certain you know price for that.
Yeah, they basically get like a discount or they just get paid when they're told to shut off. There was a big story about it because the large Bitcoin miner, I think it was Riot, but I'm not totally sure, like made more money from the payments from the demand response program than they did from like Bitcoin. But that's because the grid was insane. Like
Right.
basically they had the right to like run these things, but like the grid just would not have worked. And instead they just got paid to not run them because we had an insane heat wave and we don't have enough dispatchable power generation on the Texas grid. So when there was like big swings in volatility, the best thing was just turn off all of these miners and they got paid a lot to do that. Also, it's like a rough time. Like the thing that is, I'm a big supporter of Bitcoin. I think having like large, well capitalized miners, like the ones who are going to win and succeed over like a 10-year time horizon, assuming that interest rates don't go to 20% and like big, whatever, like prices never get good or whatever. I don't think that's going to happen, but um the ones who are going to succeed are the ones who not only run very competitive operations, but also manage the distribution of cash and Bitcoin and their costs in this very like savvy way. And at some point, like you will have like really well capitalized miners
Hmm.
who are reliable customers. Um, because a lot of them like were levered up during the last bull rush and then they got absolutely crushed because the value of their Bitcoin collapsed. They had bought like purchased way too many miners. I think there was like a long lead times on actually getting the hardware, but they'd already paid for it. It was more costly, whatever. Like it's just a tough business. So that's why I think it's also good as far as like demand response programs if there are other like successful commercial applications and also from like people or organizations, business entities who can definitely fulfill a power purchase agreement. Like if Amazon agrees to that, like you're gonna get your money. Or if like Apple wants to start training LLMs, like they got plenty of cash.
Hmm.
If Apple wants to stop just greenwashing and saying, "Hey, we're net zero," and actually like try to run a campus on on zero marginal carbon power. I'd love to see them buy some of the earliest SMRs. And I would give them a lot of kudos, but for now I'm just throwing shade.